Welcome. In this video, Zbcn 800% bullish wave is coming. What is the reason? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
An uptrend is one of the most fundamental technical analysis structures in financial markets, showing that the general direction of price is upward. The definition of an uptrend is when the price progresses over time by making consecutively higher lows and higher highs. This indicates that market participants are predominantly on the buying side, demand is stronger than supply, and the price is generally moving upward. In the scenario you mentioned, the price is currently moving within a certain uptrend, and it is expected to touch this trend line and bounce off it to continue its path. This is quite important both technically and in terms of investor psychology. An uptrend line is usually drawn on a chart by connecting at least two or more low points. This line passes underneath the price and acts as support. In other words, whenever the price approaches this line, buyers are expected to step in again. This is because the trend line represents a critical zone that market players see as a buying opportunity. Your statement that the price should touch it and bounce off to continue perfectly explains this logic. When the price touches the trend line, it reacts upward and resumes its rise. This bounce event is known in technical analysis as taking support. Support levels are areas where a downward move in price has previously stopped and turned upward again. This uptrend line acts as dynamic support, meaning instead of a fixed price level, it is a line that moves upward over time. Therefore, whenever the price touches this line, buyers tend to see it as a bottom and buy again. This allows the price to move upward parallel to the trend line. There are several key factors for maintaining such a trend. First, the price must not break this trend line. If the price falls below the trend line and closes there, the uptrend will be broken. This indicates that the balance of power in the market has shifted, buyers have lost strength, and sellers have taken control. Therefore, this line is critical for the continuation of the uptrend. Second, for this bounce from the trend line to be healthy, volume generally needs to be at certain levels. Volume is an important indicator showing the strength of market movements. If the price turns upward when touching the trend line along with an increase in volume, it shows that buyers are strong and the likelihood of the uptrend continuing is high. Conversely, bounces that occur with low volume may be weak, and the price may return to the trend line shortly afterward. The psychology of an uptrend is also very important. Investors in the market see this trend line and trade accordingly. Many traders in algorithmic trading systems place automatic buy orders based on such trend lines. This causes the price to react upward quickly when it touches the trend line. So this bounce movement is actually the result of both a technical and psychological factor. Another important point is the slope of the uptrend. Very steep uptrends usually cannot continue for long because in that case the price rises too quickly and enters overbought territory. More balanced, moderately sloped uptrends are generally healthier and more sustainable. Your statement that the price should touch it and bounce off to continue works more effectively in a moderate, healthy uptrend. For the trend to remain intact, the price must consistently make higher lows. If the price drops below the previous low when touching the trend line, this may indicate that the uptrend is weakening or ending. Therefore, in addition to protecting the trend line, it is also important to maintain the low points. Using an uptrend in trading strategies is also very common. Buying when the price touches the trend line, placing a stop loss just below the trend line, and taking profit when the price rises again is the most basic of these strategies. This way, the trader benefits from the continuation of the trend while limiting losses in case of a trend break. In the situation you described, if the price is advancing by touching the trend line, it shows that the market is continuing its rise in a healthy manner. Each bounce movement reinforces the strength of the trend and increases investor confidence. As this confidence grows, more investors buy near the trend line, causing the price to react upward more strongly each time. Especially in highly volatile markets like cryptocurrency, such trend lines provide very important signals. Prices can move very quickly and support levels can be tested rapidly. However, if the trend line is maintained, this volatility often works in favor of the investor. In conclusion, the uptrend line is a critical indicator in technical, psychological, and strategic terms. If the price is touching this line and bouncing off it, this shows that buyers are still strong, the market is maintaining its upward momentum, and the likelihood of the trend continuing is high. As long as the trend line is not broken, the rise will continue, and each bounce will mean a new opportunity for investors. But we can't base analysis decisions on trends alone, so let's look at other metrics. Keep watching.
ATH, or all-time high, is the highest price level a given asset has ever reached in its history. This level represents the absolute peak the market has hit and failed to surpass in the past. In technical analysis, the ATH line is an extremely important psychological resistance zone. That's because, no matter how strong the buying pressure was before, the price is stalled and reversed at this point. Therefore, a large portion of investors closely watch this level. In the scenario you described, if the price surpasses this ATH line, the path ahead opens up and it can rise quickly. There are strong reasons for this, both technical and psychological. First, let's look at the technical side. Above the ATH level lies an area where the price has never traded before. This area is called the price discovery zone. Once the price enters this zone, there are no significant historical resistance levels to hinder upward movement, because there's no previous market activity with both buyers and sellers in that range. This allows the price to move freely, almost like a balloon drifting upward. On the psychological side, ATH levels are a major milestone for investors. When the price breaks this level, market participants' confidence increases. Especially for investors in large funds that believe in technical analysis, an ATH breakout is seen as a strong bullish signal. This is because it shows the market has surpassed the previous peak and has the potential to make new highs. For this reason, buying volume often increases dramatically during an ATH breakout. Breaking the ATH often triggers FOMO, or fear of missing out. This emotion causes both current market participants and those waiting on the sidelines to rush in and take positions so they don't miss the rally. The FOMO effect can cause the price to rise rapidly and steeply. Many investors enter trades thinking a new bull run has begun. This is especially pronounced in the cryptocurrency market, where participants often aggressively pursue short-term opportunities. Another reason the price can rise quickly after breaking the ATH is the short squeeze effect. Near the ATH level, many investors open short positions expecting the price to reverse. However, when the price breaks this level with strong volume, these short positions start losing money and traders are forced to close them. Closing short positions requires buying, which in turn pushes the price even higher. This chain reaction can cause the price to climb even faster than expected. Psychologically, after an ATH breakout, investors may feel anything is possible. This sometimes leads to extremely fast price increases and pushes the market into overbought territory. Indicators like the RSI often rise above 70 during these times. Although this technically signals overbought conditions, these levels can remain elevated for long periods during strong bull markets. That said, not every ATH breakout is followed by an immediate and uninterrupted price surge. In some cases, the price may consolidate sideways for a while or pull back slightly. These pullbacks are often important for establishing a new support level and setting the stage for the next strong upward wave. Breaking the ATH also attracts media attention. Financial news sites, social media platforms, and investment communities share the development widely. This makes it easier for new investors to enter the market. In cryptocurrencies especially, an ATH breakout is often followed by significant hype on social media, which can further fuel the momentum. In summary, breaking the ATH line technically means entering a new price discovery zone, while psychologically it maximizes investor confidence. When these two effects combine, the price truly opens up and can rise rapidly. However, the most critical point in this process is confirming whether the breakout is genuine or false using signals like volume, closing prices, and retests. If all these conditions are met, as you said, the path is clear for the price and upward moves can continue much more aggressively.
The pennant pattern is known in technical analysis as one of the trend continuation patterns and is closely followed by investors. This pattern gets its name from its appearance. After a strong price movement, a short-term narrowing consolidation area forms, resembling a flag fluttering on a pole on the chart. For this reason, the first part is called the pole, and the small narrowing formation that follows is called the pennant. As you mentioned, when the price forms such a pennant pattern and breaks the upper line, the target of this breakout is generally an upward move equal to the length of the pole. In this scenario, this target points to a potential increase of around 800%, which can represent a very strong opportunity, especially in volatile markets. Let's examine the formation process of the pennant pattern in detail. The first stage of a pennant pattern is a sudden and strong price increase. This move is usually supported by high volume and creates significant confidence among market participants. This rapid rise is often triggered by news flow, a strong technical breakout, large investor purchases, or a generally bullish market sentiment. The steep upward movement within a short time forms the pull part. After the pull, the market naturally enters a pause phase. No matter how strong it is, no price movement can continue in one direction forever. During this pause, investors begin to take profits, some move to the sidelines, and the price moves sideways to slightly downward within a narrowing range for a while. This process forms the pennant part. Pennants usually develop slightly downward sloping, or sideways, but the defining characteristic is the compression of price on both sides. This compression signals that investors are adjusting their positions before a new move. The most critical point of the pennant is the upper trend line. This line is the resistance level that the price has tested multiple times during consolidation but failed to break. For the pattern to be completed and a strong move toward the target to begin, the price must break above this upper trend line decisively. A strong breakout here means that the price moves above this level, but that it does so with high volume. An increase in volume shows that there is genuine buying power behind the breakout and helps prevent false breakouts. The 800% target you mentioned was likely calculated by measuring the length of the pennant's pole. The target calculation method for the pennant pattern is straightforward. First, the length of the pole is measured, and then this distance is added upward from the breakout point. If the pole consists of a very long and steep rise, the target will naturally be much higher. In highly volatile markets such as cryptocurrency, these targets can point to truly dramatic price increases. A target of 800% means the price would rise to roughly 9 times its current level, creating a massive FOMO effect on investor psychology. Because the pennant pattern is generally a trend continuation pattern, there must be a strong trend beforehand. If there is no strong upward trend before the pattern forms, the pennant may lose its validity or have a reduced chance of reaching its target. However, as in your scenario, if the price has already formed a pennant and has high breakout potential, this greatly increases the likelihood that the trend will continue. One of the most important factors in the effectiveness of pennant patterns is timing. If the pattern lasts too long, the market may lose interest and the breakout may not be as strong as expected. However, pennants usually break within a few days to a few weeks after the pole forms. Breakouts that occur in a shorter time tend to carry higher momentum. It is important to remember, however, that there is no guarantee every pennant pattern will reach its target. Market conditions can change, breakouts can fail, or false breakouts can occur. Therefore, even if the technical structure appears strong, risk management should not be neglected. Stop-loss levels should be set and position sizes should be adjusted accordingly. In summary, as you described, if the price forms such a pennant and breaks the upper line, according to technical analysis logic, a new upward move equal to the length of the pole begins. In the current scenario, this would mean an increase of about 800%. Volume, market trend, and investor interest will be decisive in reaching this target. If momentum continues after the breakout, the price could indeed experience a dramatic rise in a very short time.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.